In this video, traders are going to answer the question, should I let my trade run even if I realise it's no good? Stay tuned. Hey guys, a very warm welcome to you. Thank you for joining me. All right, so this is a question from Darth Rosh. Appreciate your question. Thank you for sending it in, taking the time to write it. Okay, so hey Mark, just wondering if I should let a trade hit my stop even though I'm starting to realise I'm in a bad trade. All right, so that is a really good question. I've addressed something similar before, but I want to kind of go over it and maybe add a little different flavour to it. So yeah, how would I do if I realise my trade is starting to become a bad trade? So first of all, you've got to be cautious that you don't think you know something that you don't really know, if that makes sense. So yes, we can get an inkling that stuff's a bad trade. This is what we're going to focus on. What are the inklings that it's a bad trade, in inverted commas, is no good? But we've got to be careful we don't just come to that conclusion just because the trade is going against us. And that's human nature, right? And it's something we've got to be aware of. You know, if we're in a trade and it's just not quite going our favour, we start thinking it's a bad trade. You know, if we're in a pullback type trade, let's say we've kind of bought here and it's still drifting and drifting, you know, we tend to think if it doesn't act immediately, it's a bad trade. Now listen, I'm just like everybody else. I wanted my trade to act immediately. The perfect trade for me is I buy it and it says, thank you very much. Now that Mark's in, we can start to rip to highs. But of course, this isn't always the case, guys. We know that sometimes we're a bit early, sometimes we're a bit late. This is trading. And so we've got to be mindful we don't think it's no good just because. So assume we have our stop loss level, however we've calculated that. And, you know, we're kind of saying, right, well, what's happening? Now, if it's just drifting down here and it's not quite going yet, there are certain things that we want to be looking at that allow us to make the decision to overrule, if you like, waiting for the stop. Now, one thing I want to say is we've got to be very careful about this. You've got to be very disciplined and very structured of how you do this. Otherwise, you end up pulling every single trade before it hits the stop just because you don't like it, and that's dangerous because you're not allowing your strategy to work itself out. So you've got to have very strict rules for when you can override the stop. And if you find that challenging and you're kind of going through a disciplined progress yourself, then I definitely recommend not doing it and then just looking at the data of your stop and deciding, hey, well, that trade setup is just not working. However, if you can do this and you kind of got this iron discipline ready, you can start to add some rules. And so these rules might be something like time. So in other words, if the market has just sat and drifted for a certain period of time, it's going to depend on what kind of time frame we're trading, of course, you can overrule it and decide whether you want to cut the trade or not. So you have to wait until it hits the stop. Let's say it's sitting there and it's going, and this was a momentum ignition type trade, then you know what, the kind of thesis, the premise of the trade isn't really valid anymore, right? The momentum ignition was first pulled back, going to drive. If it's sitting here and just drifting lower and lower, the argument could be, well, actually, you know, we haven't seen that demand come in. I'm not that interested in it. So time might be a kind of parameter that you look at, a variable that you look at and go, right, well, if I'm in the trade for a more than a certain period of time on this setup, then I can overrule it. Not necessarily, but I can overrule it. Another thing is a pattern within your pattern. So what I mean, so let's use this as an example. This could be anything, by the way, guys. I've just picked this on the top of my head. So let's imagine now that we're in this trade and we get this, let's say our target's up here. I'll put for T for target. Let's imagine we had this, okay, and it faked out and started doing this. Now, that was a good entry, right? This entry here was a great little entry. However, we've now seen something else that we would normally trade on the other side that really doesn't look that great. You know, the fact that it's kind of skipped through highs, failed and started to retrace might mean that you want to overrule this. You don't want to wait for it to come back here. It's not quite got to a level perhaps where you dragged the stop up, or maybe you didn't want to drag the stop up. Maybe that was, you know, your target was this or whatever. But you know, it's done something that actually indicates a reversal in the trade. So that's a perfect example, like a push through the highs that fails and starts to come back pretty dramatically. Or maybe even something that comes up halfway and then kind of takes out this low, for example. So let's get rid of that. let's imagine it kind of came up and then started doing work down here. You know, you might, I mean, that's quite close. You might just want to leave that anyway, but you get the point. Some kind of pattern that happens within the whole trade, i.e. from here to here is what you're looking for, that really negates the whole thing. It kind of looked all right, but it shifted. And I actually did a video that's probably uploaded now already where I talked about a trade that I took where it you know, it looked great. It was a great entry, and then it didn't work. And it was very similar to that. Actually, it was more of, I think it was more of a range bound trade actually. It was kind of sitting in this range, and I can't remember when I bought, but it basically did this. I was looking for a target up here. It kind of broke out of the range and then immediately came back in on a 15-minute chart. So that to me is like, well, the trade's done and dusted. You know, it is now a range break fake type trade as opposed to a reversal type trade that you were looking for. So I think that's very important. So time's very important and pattern's very important. So try having a look at those and see if they fit into your strategy and your methodology and the way you approach the market. But just a little word of warning, like I say, and this is obviously from experience as well, guys, I've done this myself, is that if you're overruling too many times, then you need to kind of dig down again and maybe reset everything you're looking at, because you're not giving the trade opportunity to work. I recognise there's a grey area here. There's a fine line between, hey, giving the trade time to mature. And some trades, you might sit with them for a long period of time because they're a longer cycle trade. Maybe they're kind of a rounding type, bottom type trade or something like that. Or maybe it still looks okay. Maybe you've bought a low, but it's just kind of sitting above the low, which is still good. I mean, it's still bullish, but it's not ultra bullish. Maybe you've bought this kind of here, your stop's here. You wouldn't want to shut that down then, because ultimately it's reasonably strong. It's holding above this high. You're just waiting for another leg to come in. You're waiting for another push. So you don't want to be too kind of, you know, eager to cut the trade. But if it's something obvious, like it's spending a lot of time on a momentum ignition type trade early on in the trade, or there's a reversal pattern that goes against the thesis, then potentially consider cutting it, or potentially giving yourself the option to cut it. But definitely an extra advice is to write down your thought process when you're cutting it, because don't forget, as soon as you start overruling strategies and start going against what you've planned out, you're going to ruin all the information you've got unless you've got new information. So all your information about, I'm taking the strategy, this, it's working or it's not working, it's going to be false information if you're overruling it, unless you've got a little star there that says, I overruled this, I came out early because of X, Y, Z. And then you can look back and see in your journal, in your stats, and go, well, actually, overruling does work. You know, I need to keep it. Or actually, overruling doesn't work over time. I need to kind of adjust the rules or whatever it may be. All right, I hope that's helped. Again, it's just from kind of my thoughts on it. If you've got any thoughts, guys, and want to help out our question provider, then stick them in the comment section below. How do you deal with this when you come out of trades that aren't quite right? We think they're no good. Let me know. And appreciate your subscriptions and all your questions as well, guys. Take care. Bye-bye.